This is Colin Cattell with Palisade Radio, and back on the show today, returning guest Ed Kelly. Ed's the CEO of Inca One Gold Corp. He's also an expert on gold mining in Peru and ore processing. Ed, welcome back to the show.
Thanks, Colin. It's good to be back.
You know, there have been many predictions over the past few years as to how the bear market in gold would affect the 2,000 or so mining issuers listed in Canada, and those predictions ranged from an outright wipeout of 600 companies on the venture to intense merger and acquisition activity, and none of that's really materialized, but one effect of any bear market is that it breeds innovation and new business concepts. And that's exactly what I'm seeing with the advent of ore processing. That's something your company has helped to push along, Inca One Gold Corp. And it started with a company called Dynacor. It seems like now there are some 50 private and public companies rushing to the table. Ed, what makes ore processing such an attractive business model?
Well, that's a good question. At the end of the day, I think what you've got is you've got certain countries that have got high grade ore, high grades of gold per ton, and the capex for these are quite low and the returns are quite high. And if there's enough miners to be able to have a need for ore processing, then you can aggregate that for high grades of quantities of ore, bring them to a low capex environment, and get a great return. And that's what investors have been looking for in the last few years is return on investment. And the best way to do that is to have a high grade with low capex. And what also is nice is that the mining risk is separated, where you have a fixed cost that you're buying your ore for, and you take on the risk of the metallurgy and manage that. At the end of the day, you've got that gold that you're able to manage the process properly.
Looking at the different markets around the world, and Inca One Gold is currently operating in Peru, I'm sure your management teams looked at other countries that could benefit from ore processing. So what are the key criteria that you look for when you put a plant in a certain area?
Well, I would say number one is government, stability of the country that you're looking at. We're obviously operating in Peru, and Peruvian government a few years ago now decided to formalize this small-scale mining sector, and it's been a couple of years now, and they've been very successful at it in moving the process along. So I think the key thing is that you want to be able to look at government support. I couldn't imagine doing this business in an unregulated environment, in a regulated issuer listed on the TSX. So that'd be one component that I would look at. The other would be just infrastructure. You want to be able to have access to water and power and highways, because you're transporting ore a fair distance in some cases. But if you've got the high grades and you've got good infrastructure, it makes sense.
And Ed, over the past few months, Inca One Gold has been expanding operations. You went from 25 tons per day to 100 tons per day. Can you talk about the demand that comes out of a small area? How much ore can you run from an area like where the Chala 1 plant is operating? And how big can you expand a plant before you have to move on to another area?
Yeah, we bought this plant just over a year ago now. And it was first around 25 tons. We got it on a continuous basis, made some improvements to it right away at 25 tons per day. Did the upgrade, and we just completed that to 100 tons per day capacity at the end of December of 2014. We completed it, and now we're in final ramp-up mode here to be able to take it on an operation basis to 100 tons per day. We're running probably at about 45, 50 tons per day right now. So it's been a process going through that, and it's been good.
Let's talk about some of the numbers, because the average investor can't imagine the grades you guys are running is close to an ounce per ton. What's the revenue without any unexpected issues over a year at 100 tons per day, and what kind of earnings would you be looking at?
Yeah, at 100 tons per day, we're forecasting this year for 2015 that as we've ramped up here, and we'll be adding some additional capacity over time. This year we have plans that our goal that we feel comfortable with is to have 35,000 tons of production this year. And we first casted our business plan just over a year ago now. We started off at a half ounce per ton. Our grades that are on the pad now are at about 0.9 of an ounce. And we're expecting that, as we ramp up to 100 tons, is probably we're comfortable with 0.7. So we're expecting that it's going to be around 25,000 ounces of gold this year, calendar year 2015. And from that, you can generally expect that it'll be around, at $1,250 gold, around $30 million top line sales. And, our net from that is going to be somewhere around 4 to 5 million, we expect.
I think where Dynacor failed many of its investors is that it never took their model past plant number one. They're throwing off so much cash flow, and they decided to use that for an exploration project. I'm sure that you've decided over the past couple months on a strategy that once Inca One's Chala One plant starts throwing off some cash flow, as to what that cash flow might be used for. What's in the cards moving forward past 2015?
Well, I think for 2015, we've got our plans for expansion is that we want to expand once we're comfortable with the Chala One plant operating at a full capacity of 100 tons per day. We will apply for permits to be able to increase beyond that, and as well as a second plant. We've got a due diligence team that is evaluating projects daily, and we're looking to make that move and looking at different criteria and needed for future financing to be able to make those acquisitions.
Recently, the Canadian dollar has come off pretty weak against the US dollar. This is bad for a lot of people with Canadian savings, but what has also happened is that the price of gold priced in Canadian dollars has gone from around, I'd say, $1,100 to $1,500 or $1,600 at this point. How does that affect a company like Inca One that's producing cash flow and reporting in Canadian dollars?
Well, it actually works quite well for us, just for our Canadian overhead, which isn't a lot in comparison to all of our expenses down in South America. Everything is based in U.S. dollars primarily, in the Peruvian solely. It's going to be interesting to watch and see how that's affected by the U.S. dollar and the strength of that we're seeing. But all in all, it comes down to gold prices still. $1,250 gold looks good. It helps us with any kind of our debt financings that we have in Canadian dollars, obviously, for interest, and the cash that we throw off in the U.S. converted. If we see a 70-cent dollar, Canadian dollar to the U.S., then that's going to really help our bottom line, and also convert into Canadian earnings. It will help as well.
Last time we spoke, we talked quite a bit about the Peruvian government and how their move to legalize the mining industry in Peru was a huge help for Inca One. We've talked about that a bit earlier in this interview. Have there been any further updates over the past 8 months on this initiative by the government? And how is it going in terms of those miners that did not want to make the move from the illegal mining to legal mining?
Yeah, from the government standpoint, everything seems to be pretty quiet, and they're on track. They're busy making changes to different additional permitting. I think that they're really forcing the hands of the miners who maybe haven't got the message by controlling their input costs. For example, for the miners, they have to have dynamite to be able to operate, obviously. They've handed that component both for the plants, which need cyanide, and dynamite for the miners. They've handed that permitting process over to the tax authorities now, SUNAT. So you have to get a special application made and get a permit so they can regulate your costs, costs, and to be able to operate on that. So at the end of the day, if you haven't got a carte de compromiso, then you can't get this permit to be able to buy dynamite or buy cyanide, and you're forced to be able to buy it on the black market. And if you're doing that, then the price has gone up to I've heard as high as 8 to 10 times the regular price. So it really takes the incentive out of the way for these people that still want to be able to work without any kind of permits. For us, it's great because it just opens up more opportunities for us. We're evaluating different projects now, and it seems like at this point they're more open to be able to have discussions on either joint ventures or outright acquisitions, and we're just moving along in that process, and we'll see how it turns out in the next few months.
And for the purpose of this interview, I have to make a disclaimer that I own shares of Inca One Gold Corp. In fact, it is one of my largest holdings, and Ed and George and the entire team at Inca One have executed on their expansion plan in a timely fashion throughout 2014 and so far into 2015, and I believe it's going to be a very exciting year. Ed, I want to thank you for coming back on the show, and we'll have to get you back on later in the year to see when we're at 200 tons per day or above.
That sounds great. Look forward to it, Colin.